You say you've cut your price target on 70%. Are there some standouts that still look good to you?
Yeah, the standout in large cap is Intuit. We've been talking about this. It's effectively had 12 straight years of positive returns. 70% of those years it had double digit. Another name, we predicted at the beginning of the year that this would be the 13th year in a row. And it's a story that we like. It's among our top 4 large cap names. Again, they have the tax business, they have the small business opening trade. So a defense and offensive trade, and they're really good at buying their own stock back. So they defend investors on their buyback. So on a story that's been consistent, we think it's a great management team. So Intuit would be 1. Microsoft would be 2. Clearly a great story, leveraging the power of the cloud. I'd also highlight companies like Adobe and large cap. And in mid cap, one story we like a lot is Wix.
What is that one again?
Wix. It's a hybrid software internet play, helping small businesses get online. Stock has been sold hard. We think it's a great story for the long haul and has been a great compounder for investors over multiple years.
I found it a little easier to use than WordPress as a website manager. Brent, it's also, you mentioned Adobe, which Nancy Tangler just last hour told us she's also a buyer of here, which is fascinating. But what would be your message to investors, broadly speaking, who say, okay, you took down your price targets for 70% of the coverage space. You know, what is that telling me about more air pockets we could hit here in tech throughout the summer?
Yeah, I think it's really just goes back to money's going to other obvious areas that are opening, right? We didn't spend money on airlines last year. We're spending money. We didn't spend money in hotels. We're now spending. If you look at all those names, they're all benefiting. And if you looked at tech, you'd say, wow, the market feels like it's down. The market's up, right? It's just right now there's a tech buyer strike. Everyone is taking a timeout. If you even look at today, Squarespace, right? They did a direct list. It's down 12% from its reference price. Right now, there's just a buyer strike. No one wants to be in the group. And typically when no one wants to be in the group, that's the time to start to buy. So our tech desk is becoming more constructive on this pullback. Our strategists have been dead on. Steve DeSanctis, our small cap strategist, has said, get out of software. He nailed it at the beginning of the year. Now I think, look, there's selective opportunities. So what we said, compression is still 10 to 15% away to trough. There's an incredible opportunity. You just have to be selective. It's not owning the entire group. It's owning select names. As example, Intuit's up 10% year to date. So again, our view at Jefferies is be selective in tech,